Stock seesaw between gains and losses after Trump hints at imposing tariffs of 20 to 25% on India. Industrials, IT and pharma see small gains, while auto drags.
L&T reports an order book of over 6 trillion rupees at the end of the first quarter. Strong revenue and profit growth though margins don't see any notable improvement. The stock, however, climbs the top Nifty gainer today.
Tata Motors is expected to buy a 27% stake in Italian CV maker Iveco from the Agnelli family in what promises to be a big acquisition for the group after several years of consolidation. The stock slips on the M&A risk.
India's second depository in the two-player segment, NSDL, has today launched its IPO to raise around 4,000 crore rupees via sale of share by existing investors, including IDBI and NSE. The pricing at a discount to the peer CDSL is reflective of its financial metrics.
You're watching us here on Halftime Report. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu, with me Ekta Batra as well as Vinny Motiwala. Well, the market's moving between red and green just the way Vinny and Ekta are right now, but more on Vinny's side than Ekta's. The 50 points higher on the Nifty, 0.25% higher. But a bunch of earnings on our radar right now. Let's talk about Asian Paints. Met expectations. The street is believing that maybe the worst is behind. The management speaks about demand improving. In fact, I caught up with Amit Singhal, who's the MD and CEO, to discuss the quarter gone by and, most importantly, the demand trends going forward. Hear him out.
I think the quarter has been definitely much better in terms of looking at the overall demand conditions. As we have seen, I think April and May panned out much better than June. June was a hit bit because of a little bit of the early monsoons which set in. But overall, we felt that the quarter was much better in terms of demand as we have seen from the previous quarters. We saw a good tick in the urban and the rural centers as well. To that extent, I think there are some shoots of recovery which we are able to see in the urban centers as we go ahead, and we only hope that this would kind of remain. I think the monsoons have been very, very stable, and I think that's also kind of cheered up the rural demand in terms of what they anticipate in terms of something which is going to be stable overall to that extent. I think industrial, institutional demands have been much better than retail in terms of what we have been seeing. So overall, I think all round, from a relative comparison, the demand conditions have been much better, leading to a much better volume growth in terms of what we've been able to deliver this quarter.
You've called out high single-digit volume growth and value growth for this year as targets. Can you explain this a little to me in more specificity? The reason why I ask you is because, you know, there is a negative price mix of roughly 5%. So if you're growing volumes at high single-digit, should we assume revenue this year will grow only mid-single-digit?
So overall, if you see, I think the industry has not grown last year as well. So I think the overall industry is operating on relatively lower basis to that extent. But despite that, given the fact that the uptick in the demand doesn't seem to be like a surge, it is something which is just coming up to that extent. I think we are obviously seeing it from a little bit of a cautious lens in terms of going forward. So as we go forward, we still expect that the industrial, the institutional, which is the B2B business, will do definitely much better than the retail. And given that anticipation, we feel that possibly the value growth in terms of would lie at a mid-digit level in terms of going forward.
Got it. Value growth at mid-single digit, volume growth at high single digit. What about margins? You've maintained that 18 to 20% band, but the way things are, it appears that it's difficult to get to 20% in the immediate term. So should the street work more with 18% than 20%? Or do you think 20% towards the second half of this year is possible?
See, if you look at the console level, we have delivered about 18.2% this quarter, which is sequentially higher than what we delivered last quarter. On a standalone level, the PBDIT margins are closer to about 19.4 in terms of what we are seeing, which is again much better than the sequential quarter in terms of what we look at to that extent. I think one of the big focus at Asian Paints has been that we've always looked at cost excellence. We have looked at possibly seeing that how we are able to look at going forward a sustainable growth, which basically has the margins intact in terms of the way we go. But I think there are all engines firing in terms of looking at that we would like to have a good growth going forward to that extent. And therefore, I think it is quite okay to kind of maintain that margin brand of 18 to 20 in terms of what we have taken to that extent. And I think we are putting a lot of measures in terms of differentiated strategies, brand saliency, and so on and so forth, which could kind of really look at giving us a little bit of a sustainable top line and looking at a decent band of margins in terms of what we're aiming at.
Do you believe the worst of market share loss is behind you, and from here on you'll at least hold on to your current market share, if not lose further?
Definitely, that's the intention in terms of going forward. I think all energies, all strategies in terms of what we are putting into the market are geared towards that. We have seen a surge in terms of the brand saliency, in terms of going forward. Our share of voice has gone up in the market in terms of how we are looking at. Our approach has been always consumer-led and looking at something which is differentiated, something which is innovative in terms of what comes in the market. And given this intention, we feel that our various initiatives, whether from a point of view of institutional, whether retail, or even the surge in industrial in terms of what we are seeing, all of them should kind of augur well in terms of this environment as we go forward.
We've spoken about the earlier competition many times before, but this time around, JSW has gone ahead and acquired AkzoNobel as well. Do you think anything will change? Because you know both the companies, they've been around for a while. Do you think together they could be a different animal than what they were individually?
I don't think so, really, because I think today there is an acquisition which has happened. I think as the acquisition happens, it goes through the entire area of consolidation, how they look at their brands kind of consolidating in the market overall to that extent. One thing which might change is that the whole area of the, the institutional and the industrial would get a little bit more competitive in terms of what we would see, given the fact that Akzo had some strengths in that area as we have kind of looked at earlier. But overall from the market, I think it's just a consolidation which is happening. It's 1 plus 1 becoming 2 and not 1 plus 1 becoming 4.
Okay, let's talk about the other one then, because, they believe that you have done some uncompetitive practices. They've approached the Competition Commission of India as well. You on your part have also, made your statements. Where do you stand on that?
See, overall in the market, we've had earlier complaints also 3 years back, and we came out unscathed out of that, given the fact that Asian Paints is definitely a far law-abiding organization. We believe in terms of looking at working with ethics and values in the market, partnering the stakeholders very strongly in where we go. We have a very clear code of conduct in terms of the way we work, a clear competitive policy in terms of the way we progress ourselves in terms of going. So we are very clear that for us, it is business as usual in terms of what we are doing. These things will happen in the market to that extent, could be also reactions of what possibly the challenges some of the new competition is facing in terms of going ahead. But as we go ahead, we have really said that we will comply with the legal processes in terms of going forward and see in terms of saying that our conduct in the market is something which is above board.
So you believe that just like the earlier times when you were unscathed, this time around as well, there should not be a big problem?
I think the proof lies in our working. The proof lies in terms of the way we kind of conduct ourselves, and that is what the market trusts, and that is we believe firmly in terms of taking that route.
All right, and final question before we let you go. What explains this persistent, focus on home improvement? Because it's been many, many quarters where the revenue contribution hasn't been as much. From a stock market standpoint, the valuation contribution hasn't been as much as well. In fact, some of the acquisitions that you've made, you've had to write down value on that as well. Yeah. What explains you still sticking around with that? Because, more than the numbers, it's just the management bandwidth becomes a bit, challenging here.
No, I think one of the big areas why we are pursuing this is the fact that, given the fact that we appropriate home as a strategy very, very strongly, and we believe clearly that, the corporate positioning of Har Ghar is definitely centered around home, and therefore we are appropriating home decor in a very strong way, because going forward, we feel that that is one area which really keeps the brand separated from the rest, who are possibly operating in the same band, which is only about functional products to that extent. I think the whole area of emotional in the home is something which is very, very important to that. And that is the whole strategy in terms of bringing home decor in, because we are saying that we are moving from a strategy of share of surface to share of space within the homes to that extent. Yes, I think the last quarters have been not very, very good. But to that extent, we are trying to look at some consolidation. We are looking at in terms of some targeted approach which are there, because the segments which we are there, I think are very, very important to us from a point of view of whether it is kitchen, whether
Right.
it is from a point of view of lighting and the point of furnishings and so on and so forth. To that extent, I think we are not giving in so early in terms of just going for it, but I think there is a separate vertical which works, which doesn't really interfere with the core vertical. So I don't think so. It is something which is taking toll with respect to the management bandwidth to that extent. It is something which we are really putting like a startup within to that extent in terms of how we are going. And we are kind of confident that as we go ahead, we will turn around the business in some time as we go ahead.
So then let me flip this around and ask you a final question. Do you have big internal targets here? If you could reiterate that for us. And if you are so bullish on this, then maybe take a few more bolder bets instead of just these, smaller bolt-on acquisitions, etc. If you, believe that there is growth here.
See, I think the current environment, you have to kind of go along in terms of the way the current environment is. I think the overall demand conditions for the entire industry, whether it is overall the consumer durable industry, the FMCGs industry, we are not saying that it is so bullish in terms of the way it is going. I think there will be a time in terms of where we would like to take a punt in terms of going forward. But I think it has to be the right environment, the right demand conditions in terms of what we need to kind of do. So I think we would possibly do a calibrated kind of work in terms of taking this category ahead and not really jump into it at a time which might not be very opportune.
All right, we take that point. That's the management of Asian Paints speaking about good demand conditions right now. More importantly, they may make a few bold bets in the home improvement space going forward, but waiting for the right environment. Stock holding up. But the stock of the last few minutes has definitely been Avenue Supermarts or D-Mart, because the analyst meet is currently underway. And the key takeaway from all the analysts that are there is that the company has been talking up store expansion. And remember, one of the quibbles that the analyst had was that the stock company hasn't been expanding stores at a pace as brisk as the street was expecting them to. And now that they're talking about doubling down their efforts on store expansion, the street likes it. Remember, it's a stock which has limited float. So as a result of which, and it's underperformed as well. So any move on any side is usually exaggerated on Avenue Supermarts. But the fact that managements get a little excited about store expansion has the street fairly excited, and the stock up 5%.
Okay, all right, Mangalam, thanks for that. So that's Avenue Supermarts. That stock is up around 5%. Remember that they did announce a store opening just yesterday in Punjab, and they have a total of around 426 stores opened at this point in time. That's Avenue, up around 5% for the markets at this point in time. It's still quiet, very range bound, no definitive reaction or direction at this point in time either way. We'll take a short break, but a reminder for our viewers as we do that: unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, our premium members only experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.
Welcome back to Halftime Report on CNBC TV18. As of now, Nifty managing to hold on to 24,850 levels. Obviously, you had a lot of listings that happened today as well. We had IndiCube, a muted listing that's come in there. On the other hand, GNG Electronics, that's the one which saw a good listing. More than 40-50% as of now is what the gains is what it's holding on to as well. But talking about IPOs, we do have Blackstone as well as Sattva developer-sponsored Knowledge Realty Trust, which is going to be coming out with a 4,800 crore IPO, opening on the 5th of August with an offer size of 4,800 crores. Like I mentioned, this is going to be to discuss in terms of the IPO offering, the business outlook. My colleague Reema caught up with Vijay Agarwal, Managing Director at Sattva Group, Ashish Mohta, who's the head of real estate acquisition India at Blackstone, as well as Shirish Godbole, Chief Executive Officer at Knowledge Realty Trust, to talk about the outlook for the company. What are we expecting there? Listen in to an excerpt of that conversation.
So largest is the right word. Rima, we are 62,000 crores gross asset value. We are 46 million square feet, 3,500 crores of NOI, a very large and diversified tenant base across the best markets in India, Mumbai, Hyderabad, and Bangalore. So that's, in my mind, you sort of dovetail that with what's happening in the office markets today. You've seen the best absorption. We have the highest portfolio occupancy amongst every other REIT. We just think this is the right set of attributes that brings KRT together.
Shirish, let's get to the numbers then, right? In your RHP, you're projecting about a 12.5% increase in the net operating income from FY25 to FY29. Take us through the math and the assumption.
Yeah, so we are projecting a 13% CAGR, as we call it, as compounded annual growth rate of each year for the next 4 years. And 60% of that, 13%, 60% of that is actually through contracted transactions. So these are leases in place or new leases we're signing or expansions we're signing. So the good news is most of that growth is built in. The remaining 40% is through either leasing up some of the vacant space we have 91% occupancy, as you said, as well as a mark-to-market potential. Another beauty, as Ashish was pointing out, but the attractive part of our portfolio is that number of our leases are below market rents, and we have a potential to raise those rents 23%. So that, along with the lease-up, makes up the remaining 40%. 60% is contracted revenue, and so that's the 13% growth compounded annual each year.
And what is the kind of dividend investors should expect?
So we have a stabilized yield that we are going to provide to our investors, beginning with 7.2%. It grows quickly thanks to this compounded growth. It grows quickly to 7.7 the following year, and then 8.2, and so on. So we have a very good dividend distribution strategy as we go forward. Plus, there should be some more capital appreciation, and therefore total return in the mid-teens is what we hope we can provide to our investors.
And this 7 to 8% yield, how would it compare with the other REITs?
So, today it's obviously a moving target, the market's trading, but Embassy, which would be one of our competitors, Mindspace, are both trading at a sub 7%. In fact, Mindspace is a sub 6% yield. So we think our 7.2% is a very attractive yield as we provide it to our shareholders.
The other thing, Rima, just on the dividend yield part, I think that's pretty relevant across REITs, is that it has the most tax efficient distribution structure. So when you talk about the dividend yield, call it broadly about over the next 3 years, you're looking at about a 7.5% yield. Post tax would be close to about 7-ish. Okay. Right? So the leakage is very little. You compare that to an alternative fixed deposit investment, T-bills, you lose almost 30%. Sure. Right? So the leakage and therefore the post-tax dividend yield to the investor is the most efficient. And I think that's the biggest selling point here from an investor perspective.
Now, I can see that some of your tenants are global giants. You've got Apple, Cisco, Amazon. You've got large domestic front offices at the Birla Group. So how explain to us the difference between KRT and the others in terms of your tenants, in terms of the lease structure, in terms of the location?
Very small percentage of our tenants are actually from the ITES industry. And that's the big differentiator with us. Our top tenants are all global capability centers and not ITES
Can you give
tenants.
numbers?
So that's a big difference. So, 29% of our total space is occupied by the top 10 tenants. And if you take that in comparison to some of the other competitors, the ITES number is a lot higher than what we have, which is none. So in our top 10, 0% is from ITES. They're all global capability centers or front office space, as we have in Mumbai, but none of them are ITES. And that's a big differentiator versus the others.
And GCC would contribute how much?
So GCCs as a whole contribute about 45%. But in the top 10, I would say it's a big 75% of our top 10 are GCC.
Mr. Agarwal, now you're a veteran in the real estate industry. You've got, I think, 80 million square feet. Now, India's office and residential strength, especially in cities like Bengaluru, has been underpinned by the Indian IT industry. Now there is fear that with job losses picking up in the tech sector, and who knows, tomorrow even GCCs could lay off because of AII. Do you think there is a risk to India's real estate market as a whole?
Rima, that Indian real estate has been not only on IT and ITES, it has been, as Siris has mentioned that one, it has been all the sectors are growing in India very well, because you name the pharma, consultancy and your GCCs, your education sector, every sectors are in growing path. Our India story has been last 10 years and the next couple of decades will be very, very progressive. Not only the office space, residential space is also has been going in a big way. So we don't see any problem. As Siris has mentioned, our exposure in IT, ITS has been very minimum. Other sectors, GCC, consultancy, pharma, financial sectors, all are been much bigger, these things. So we don't see any risk in that.
Ashish, 46 million square feet right now in terms of an office space. What's the pipeline looking like?
Look, I think a couple of things. One, most of our assets that were high quality and readable are part of this portfolio today, right? And that's the same for Mr. Agarwal as well. I think all of the Satwa assets that could have been rated today are in this portfolio. Alongside that, there are a bunch of ROFO assets. That's something that's been identified on the Satwa side. Additionally, I would say that I think what we've seen in Nexus, right, is been the fact that with a brand neutral platform, you have the ability to add more assets from developers who don't have the scale necessarily to do their own REIT, right? And I think that's what we want to sort of position KRT for. If you look at debt levels today, we are at about 19% LTV.
Post the debt reduction.
Post the investment.
And 19% of your gross asset value.
That's correct, right? So it is one of the lowest LTVs out there, which gives you a lot of headroom to acquire assets without diluting. But I think 46 million square feet can easily become 90 million square feet over the next 5 to 10 years.
Okay, so that's Knowledge Realty, 4,800 crore IPO hitting the market soon. Just want to point out for the markets, well, it is range bound. Just want to point out one particular stock which is in focus today. That's Dr. Reddy's, which should come up for you. It's recovered from the day's low, but nonetheless, it is in focus because Novo Nordisk, which is the Danish pharma company, which is basically the innovator of Ozempic as well as Wegovy, those blockbuster weight loss drugs, has in fact cut its guidance. So they're not expecting as much growth as anticipated earlier. What they are saying is that they are now expecting 2025 sales growth to be anywhere between 8 to 14% versus 13 to 21% previously. And that's because of the slowing sales in Ozempic and Wegovy. Now, remember that why does Dr. Reddy get impacted is because they will soon be entering the market on a generic basis. So, and along with many other companies such as, the other generic filers, but nonetheless, Dr. Reddy's is expected to be a front runner for this. So that's the reason why you're probably seeing the stock down around 0.8%. We'll take a short break, but remember to tune in to the all-new CNBC-TV18 Prime, bringing you insights from policymakers, business leaders and economists, shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC-TV18 Prime at 12 noon, for the Global Reset at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.
But it's a good up move that we've seen on the markets. The Nifty closing in on that, 24,900 mark. Does it cross past and stay above that or not? What are the options data indicating? Let's go across to Nigel, who's joining in with all things F&O at midday. Nigel.
Well, that's right, Mangalam. It's good to see some green on the screen. I thought I'll be the lone person who'll be wearing green today, but at least we have some green on the screen, both on the Nifty as well as on the broader markets. And at the start of today, I was mentioning that the rollovers are yet to pick up, both the Nifty as well as the Nifty Bank. Rollovers on a D-2 or 2 days before expiry was relatively lower, but that's gradually picking up now. So that's a factor that you should be tracking as well, because still yesterday it was relatively lower. The India VIX, it's cooling off, and this series hasn't been a great one for the bulls. But the good news is the volatility index or the fear index hasn't really spiked up, and that continues to remain subdued, sub that 12-odd mark. The PCR, we had mentioned 2 sessions ago, at around 0.64, it's in an oversold zone. And, yesterday, once we went around 24,600 odd, from there we have seen a bit of a bounce. And the PCR has moved from around 0.64, it's moved to around 0.83 the last time I checked. Because, we are seeing put writing that's come back into play. Some of those call writers as well, they are moving out. And that's why you're seeing the PCR has bounced up. Now, a couple of levels that we're going to be tracking going by the options data. 24,900 call, that's fairly active in today's trading session, and the premium has moved up marginally. From around 53 rupees, it's moved to around 62 rupees. So out there, there could be some writing as well, given that you have expiry that will play out tomorrow. On the downside, the 24,850 put, well, that's added a good amount of open interest out there. And the premium from around 85 rupees, that's come down to around 50 rupees. So there is some writing out there, and the put writers, they are in the money right now because they're eating into that premium. Now, looking at the levels, just tying in the levels with the options data, the crucial level to track for today is 24,950, going by the action we're seeing at the 24,900 call. So that's important. And the day's low also is going to be important, which is at around 24,772. And that perfectly ties in with the writing that we're seeing at around the 24,800 put. So those are the two crucial marks that you'll be looking at for today. If the Nifty can somehow get past the 24,975 odd, you'll be feeling more confident. And the first reference point on the downside, as I said, is around 24,770 odd. The crucial factor to track is going to be both the big boys of the Nifty. The Nifty bank, till the last time I checked, it was still doing a relative underperformance. It needs to get past the 50 DMA, move towards the 20 DMA, because that's been the one that's been in good form, actually, in comparison to the Nifty. And it's lost its way in the last couple of days. So that's important. And the other one is Reliance Industries. Today as well, it's more or less flattish, but yesterday it bounced up close to around 2%. It needs to get closer to around that 1480 odd mark, where you have the 20 as well as the 50 DMA. So both these two hold the key. For the time being, a bit of a bounce. Follow through is something that the bulls will be looking forward to, because tonight we'll be hearing from the Fed, and any kind of optimism, any kind of dovish signal will be good from a bullish perspective. Back to you guys.
Absolutely, Nigel. Thank you so much for that. Follow through is what everyone will be watching out for now. But a lot of stocks that are buzzing in trade as well. Now, obviously, Avenue Supermart, we just spoke a short while ago, 3% up in the last 30 minutes is what we've seen coming in. But Vivek is here to tell us which are the other stocks buzzing in trade and why.
Thank you so much for that. Again, most of the stocks today that we're highlighting moving largely on the back of results reactions. What is it that the street is cheering, or in certain cases not liking as far as the results were concerned. First stock on the list has to be the top Nifty gainer, the capital good infra space, major L&T doing very well as far as results were concerned. Order inflows extremely strong, much above what the street was anticipating. On the back of that, stock higher by 4.5%. This is on top of the 2% up move that we saw in yesterday's slightly muted market. On the other hand, another stock, from this particular space itself, GE Vernova and TED, perched at the upper circuit, a very strong beat to what the analysts were penciling in. Order inflow very strong, showing robust visibility in the coming quarters. The other stock on the radar is one from the pharma pack, Jubilant Pharmova. Yesterday there was a one-off in the result. On the back of that, you did see profits actually dip, but the company in the call has said that the CDMO side of the business is scaling up. Stock higher by over 6% today. Bank of India, earlier today we had the management on our channel. That, they have told us that the NIMs or the net interest margins have bottomed out as far as Q1 was concerned, and they see an upward trajectory from this time onwards. They also see close to 9,500 crore of gross recovery in the coming quarters. Stock higher by almost 3% today. And Coromandel International, good set of numbers, been a couple of days, but today one of the top gainers as far as the NSE 500 was concerned. On the other hand, quite a few laggards as well. Top amongst them being Tata Motors. The street is actually eyeing a very large acquisition announcement to be made soon from this particular name. A large European company is what the Tata Motors said to be eyeing. Street a little wary on this large buyout. Info Edge, a very large or a significant downgrade coming in. BofA Securities has double downgraded this particular stock. Stock lower by almost 2% today. Hindustan Unilever, while you just mentioned DMart, one of the top gainers, this particular stock, Hindustan Unilever, one of the top drags as far as the FMCG pack is concerned. And Five-Star Finance, this particular stock continues to see significant selling pressure. Remember, the results were very weak, where asset quality deteriorated quite significantly.
All right, Vivek, thanks a lot for that. So those are a bunch of stocks which were buzzing around. What we'll do is take a short break, take a break from the equity market itself, come back on the other side. Manisha Gupta joins in with all things commodities. Kunal Shah of Nirmal Bang with her.
Welcome back, and Kunal Shah heads commodities and currencies at Nirmal Bang, and he joins us live on the show right now. Kunal, hi, thank you for joining in. And it's about the crude oil prices, because we are up by 6% in the past 1 week. We're inching very close to that $73 per barrel mark. From where we stand and the way factors and fundamentals and events are unfolding, do you see further gains?
I think it's more to do with Donald Trump indicating that they have given 10 days window to Russia to make a deal on Ukraine. And if that doesn't take place, India and China, if they continue to buy oil from Russia, they'll be having additional sanction and additional tariff. So I think this is something, which is driving oil prices. We've seen the numbers where we've seen in last 1 month, Saudi Arabia have bought oil from Russia. These are the key indication, if this actually materializes. I think it's more to do with the fear-driven rally in oil prices rather than actual fundamentals. People are worried whether US imposes another round of sanctions on Russia. That time will tell, but I think market is discounting that. So there's a possibility in this kind of scenario where Brent can hit $75 and WTI can test $72. So for the time being, we have to remain on the long side and expect that market will build this kind of geopolitical premium in prices of oil. So near-term trend continues to remain positive. If the Russian crisis gets resolved, US, whatever pressure they are applying, if you see ceasefire announced by Russia as far as Ukraine is concerned, then suddenly you will see a fall. But till then, the prices will remain at elevated levels.
Kunal, since you follow currencies very, very closely, that's a flash running in on the bottom of our screen, which says that 0.5% of a decline in the Indian rupee, that's the lowest point in the day. And correct me if I'm wrong, but 85.20 is the high that we saw for the currency. And from there, we're trading at around 87.34 on the screens. Where do we go from here?
I think it's just a matter of time where, the fundamental trend of the US dollar is definitely on the downside. You've seen the big, beautiful bill is going to contribute to another $3.5 trillion of debt to the US. So the dollar index is going to, come down very sharply. And hence, I believe that whatever short-term depreciation in the USD-INR pair is going to be very short-lived. So maximum another 40 paisa or maximum 50 paisa weakness from here. But from then onwards, rupee should again gradually strengthen and come back to levels of 85 and then 83 and kind of that. So I'm optimistic about the outlook on Indian rupee, and the short-term aberrations will be short-lived.
All right. Kunal, when you say 85 and an 83 as a possibility as well, are you willing to give a timeline for that?
I think looking at the way the things have shaped up in next 6 months, I'm expecting at least 150 basis point of rate cut from the US. And considering that the possibility of 83, 84 in next 6 months to 8 months is very high. So I'm pretty optimistic about the outlook of Indian USD-INR pair.
Talk to us also about gold and silver prices, because we're looking at lower lows onto this one. July really hasn't done much when it comes to precious metal as a space.
I think it's going to get interesting. So after the rally till the month of April, the prices have consolidated in the month of May, June, July. Okay, we've seen a good consolidation taking place where the upside was capped. $3,450, $3,500 is where the upside was capped as far as gold is concerned. And on the downside, we are not able to see gold going below $3,300. So we are seeing gold trading in a range of $200, $250. I think now the major focus will be shifted on the Fed commentary today. Whether Mr. Powell is going to be dovish or not, that's one of the most important catalysts or the drivers for the price of gold going forward. We expect going forward some dovish stance from Fed may be adopted, because whatever tariff-related inflation we are going to witness, that is going to be a one-time. So let us say if there is on an average 20% hike in the inflation, okay? So if that is the case, then the hike in inflation will be just momentary. So 20% impact on inflation because of the tariff, that is not going to be forever. So I think the dovish stance can be seen by the Fed going forward. Today's commentary, I'm expecting Fed to remain more dovish. and that can be positive for gold and silver both. So I'm expecting gold and silver prices to rally post today's FOMC meeting, and I'm not very bullish, but 34.50, those kind of levels for spot gold can be witnessed in days to come. So I think today the possibility of gold and silver moving up is very high. Silver fundamental itself are very bullish. So silver is going to head towards $40 and gold 34.50.
Okay, key will be to watch out for the commentary that will be coming in from the Fed this evening as well. Thank you so much, Kunal, for joining us, as well as Manisha for joining us for this interesting chat as well. But on that note, we're going to slip into a very short break, and we will connect with the management of Gateway Distriparks after this break. Stay tuned for that.
Welcome back. A stock that has been buzzing around all through the morning and this day so far is Gateway Distriparks, up around 10% after reporting a good set of numbers in the first quarter. Consolidated numbers, obviously, further aided by Snowman's merger. Let's talk about the overall performance of the company going forward. Samvid Gupta, who's the Joint Managing Director, joins in now. Samvid, good afternoon. Good numbers coming in. Let's get out the basics first. What was the EBITDA per TEU for your rail and CFS business in the first quarter? What's the target that you have for this year on EBITDA per TEU and volumes for both your rail and CFS business?
Yeah, hi, good afternoon. Thank you for having me on the show. So the rail EBITDA per TEU was about 9,100 for the quarter. CFS was at 1,500. So there was a slight decrease in the rail because of lower double stacking as well as lack of exports. So there was some imbalance and increased empty running. CFS improved after a few quarters. It's come and crossed 1,500 again. So the target is that within the next couple of quarters, we should get back on the rail side to 9,500 per TEU, and CFS should hover around 1,400 to 1,500. On the volume side, we are looking at a double-digit growth for the rail side. CFS also has seen some improvement in volumes, and that should continue about the 5-6% mark.
Okay. Samvid, hi. Welcome to the show. Just wanted to understand that what was your double stacking this quarter itself, and what are you targeting in FY26?
So it was 39% this quarter. Year on year, it was about 32% Q1 last year. So we've seen a big improvement there. But still, our target is closer to the 43-44% figure, which is achievable. But in Q1, there were some restrictions, especially towards Mundra Port. So we saw higher single stacking going on. But within the next couple of quarters, we will see improvement on that.
Okay. Samant, good afternoon. You just highlighted a volume number. I just want to clarify again. Volumes for CFS, you said, would be in the 5 to 6% range, right? Because earlier you were expecting 2 to 3%. So 5 to 6% is what we're watching out for in FY26?
Yes, that's correct.
Okay. And also in terms of current utilizations, what is that across streams? You have around 5 ICDs, 5 CFS as well, and you're planning 2 more locations, new locations as well. What is the outlook there?
So on the ICD side, we buy land way ahead of its time. So our capacity utilization on the developed side would be about 60-70%. As we get closer to about 70-80%, we develop some more of the land, and it's basically paving of container yard or maybe adding some more equipment so that we have enough leeway to whenever the volumes come in that we can handle it. So that's on the land side. On the rail side, we have enough capacity to handle about 40,000 TEUs per month. Currently, which we're doing about 33,000 to 35,000 in some months at its peak. So both ways we have enough capacity before we decide to expand more.
All right. And are you still interested in selling the CFS business? Because I remember you all were looking to focus only on the ICD business. And if there was a buyer for the CFS business, you all would be happy offloaders.
Yeah, it depends on the valuation. We had some offers, but they weren't up to the mark. So only if the right offer comes in, we'll look at selling the CFS.
What, according to you, is a right offer? I mean, if you could give us a rough ballpark basis, the business that you do and, peers are valued at a certain price. So what would be an attractive enough offer for you?
So it's not just a valuation of a multiple of EBITDA. There is a real estate value. There is a premium for giving 4 or 5 locations together. So we don't have an exact figure in mind, but in the past we've mentioned closer to 4 digits at least.
Okay, closer to 4 digits is what you'd look at. Quickly, before we wrap up the conversation, any further stake addition in Snowman that you would be looking at? It currently stands at around 50-odd%.
So that was our initial target. We're not against the idea, but we at the same time don't have any immediate plans to increase the stake as well.
And the dedicated freight corridor, is that on cards earlier than expected?
Maybe in Q4 is what we're expecting. The target right now is December 31st, but I think based on ground level, what we've heard, it might spill over to February or March.
And you've maintained market share or gained market share in some of the ICDs that you operate in right now?
Sorry, the voice got cut a bit. I couldn't.
Said your market share, you've gained or maintained?
We've maintained. NCR has been stable at about 17%. We've gained in the Uttarakhand belt, but the macro market has not grown as much, but we've increased our market share there.
Okay, you've increased your market share there. And overall, in terms of margins also, what are we watching out for FY26?
Same, about 9,500 for the rail vertical, EBITDA per TU, and 1,500 for the CFS vertical. So it gives rough margin of 25%.
Okay, 25% rough margin is what we're watching out for. Okay, Samvid, thank you so much for joining us on the show. That was the management of Gateway Distriparks. But on that note, we're going to slip into a very short break. We'll get you more on the markets and stock-specific action on the other side.
Watching us here on Halftime Report, the stock of our last hour or so has been Avenue Supermarts, up nearly 6%. The management in the conference call has said that they are likely to improve or increase store footprint by 10 to 15% every year, expanding their store acceleration, particularly in North India, a sign of things to come when they had opened their first store in UP Major earlier itself. And Navil Laruna, who is likely to step down as MD CEO, make way for Anshul Asawa, will particularly handle North India real estate expansion over the next few months. That has the street excited. And finally, they will double down on investment on store expansion, considering what is happening across, including that in Q-commerce. The street likes it. The stock higher, management fairly aggressive. Good growth coming in for Greaves Cotton at the bottom of your screen as well. 50% revenue growth, or rather 50% EBITDA growth. That stock too, up around 6.5%, a big spike post their numbers. We leave you on this edition of Halftime Report. Stay with us on CNBC-TV18. Business Lunch comes up next.